Hey, welcome back to my channel. I'm going to be covering Chevron in this video and evaluating the company to see where I think the company is worth and compare it to the current stock price. I'm a current stockholder of Chevron, have been an investor for a long time in Chevron, and they announced their earnings about a week ago, so I have a fresh set of financials to take a look at and update my valuation of Chevron. I'll take you through my process and then to the decision that I'll make, whether I will buy more shares, hold my shares, or sell my shares in Chevron. Do me a favor and like my video and subscribe to my channel, and also comment on the video. Let me know what you think of Chevron, any ideas, or what you plan to do with this stock. Now let's get into this company. I have a process to go through. It's 4 questions that lead me to a decision to buy, hold, or sell. And the first question is really, do I want to be part owner in this business? Do I like the industry that Chevron is in? And do I think the Chevron management team is operating the company well? Do I think their balance sheet's in really good health and less than 3 times EBITDA? And am I offered a nice discount on the stock, and therefore I could expect my investment to go up over time? And based on the answers to those questions are buy, hold, or sell. Chevron is the second biggest oil company in the world, next to Exxon, and they are a fully integrated energy company. They own the reserves, either that are on land or offshore, where the oil is located. They extract it from the ground and then put it into a refining process to create petroleum products, the most popular being gasoline. They have a lot of chemicals as well that they produce from the fossil fuels that they extract. So it's a fully integrated energy company. These companies tend to have a lot of capital requirements, where they have to build these large refineries or invest in an oil platform that's going to be put in the ocean. So it takes a lot of capital. It also takes a lot of know-how. The oil business is really you have to have expertise, so you know where you should be exploring, where you should be investing. So Chevron has those things. They have the knowledge, they have the capital, and that in itself creates a moat. It creates a barrier from competitors entering, because competitors that really don't have the knowledge, they would very quickly lose lots of money. And last thing is, oil is a commodity. So based on where it's being traded, if oil is priced very high, companies like Chevron really benefit. If oil is priced lower, then their revenues go down. Looking at where oil prices have been over the last 5 years, they're currently at $76.92 per barrel. And that's not too bad. If you look at it, that's pretty close to where it's been for, let's call it, a year and a half. And it did peak in 2022 at a very high rate. And that enabled Chevron to really produce high revenues and high profitability and high free cash flows. The oil prices did not get that high, but they did get a rally in the price in the months of September and October. We really saw oil prices exceed $80 a barrel. So I think that creates a really profitable environment for Chevron. As long as oil prices stay above $60 per barrel, and that's my metric, by the way, this company is going to be profitable. They're going to generate really good free cash flows. The higher you go, the more profit, the more free cash flow. But overall, I think oil prices are in a good place for Chevron. And let's face it, we're going to use oil for 20 to 40 years. And the sources of crude oil are very limited. And it is a scarce, and it's a resource that's being depleted. So every month there's less oil in reserves. So the demand for oil is going to persist for the next 20 to 40 years. And the price, if anything, could really begin to climb, especially if you have some type of disruption to supply. For example, the war that's happening in Israel could really disrupt that supply if any of the other big oil producing companies get involved in that war. So hopefully that war gets resolved with not, as the least amount of bloodshed. But those are the types of things that could affect oil prices, as well as demand. If we see demand really go up, oil prices will also go up. So to be an investor in Chevron, you got to do your homework on oil prices, which I try to do. I look at oil prices at least every week, if not a few times a week, just to see where oil prices are. Taking a look at their earnings release for the third quarter of 2023, in general, it was a very positive report. The company had very good earnings per share. Cash flow from operations was really good, really solid cash flow. They're actually below the cash flow rate that I expected. Last year, they had such a good year. They generated like about $37 billion of free cash flow, which was incredible. I didn't expect that to repeat itself, but I expected more of a year that would resemble 2021, and it is falling behind that rate that they experienced in 2021. The return on capital employed was really nice and high, 14.5%. So that's a really good return on capital. They paid really nice dividends, and I'll get into dividends a little later. But also keep in mind, they've been buying back a lot of shares. So they're giving back money to investors in dividends, and they're buying back shares, therefore having fewer shares, making each remaining share more valuable. And they have very little debt. This is their debt ratio. Also be looking at debt as a ratio to EBITDA, and I'll show you how low their debt is. So this is a summarized statement of cash flows for the first 9 months of 2023 compared to the first 9 months of 2022. And they produced really good cash flow from operations, and they put a little more capital than last year back into the business. Last year, they just had such a booming year, and they didn't have to put as much capital back into the business. So last year, they produced such high cash flow. It was pretty incredible. But this year, they're doing well. It's just not as good as last year. So I believe that Chevron is discounted by 30%. And what that means is that each share, based on my calculations, is worth about $185 a share, but it's being sold in the market where each share is sold at $142. I base it on two valuation methods. One is discounting free cash flows, and the other one is discounting earnings per share. Let's go over free cash flows. First, I'm starting with a rate of annualized 2023 free cash flow that I expect in the company, and that is 21.7 billion. Is where I expect they're going to land for the full year of 2023. And I'm going to grow those by 5% for the first 4 years. And then after that, the terminal value is just going to grow at 3%. And I think those are conservative. Again, as oil becomes more scarce, I think it's going to become more profitable for Chevron, especially since they have so many reserves. I'm going to discount all those free cash flows that I expect in the future by 8.5%, which is the weighted average cost of capital, to get to a net present value of all those free cash flows of $389 billion. I'll add the cash on the balance sheet and take away debt on the balance sheet to get to an equity value of $374 billion. The company has a market cap of $272 billion. So it offers up a nice discount of 40% based on free cash flows. Earnings per share are really good for this company. They have good profitability in the business. So I'm going with an EPS at $15 per share and going with the PE that is 14. That is a good solid PE for Chevron. I'll grow those earnings per share by 3%. And when I discount those, I get to a value of Chevron based on earnings per share of $157. But they're being traded. You can buy shares at $142. So it offers up an 11% discount using earnings per share. I blend the two, but I put more weight into the free cash flow method, 2 parts free cash flow method, 1 part earnings per share to get to that 30% discount on Chevron. Looking at where the stock's traded over the last 5 years, it's currently at $142 per share. I value the company at $185. So it offers, about a 30% discount if you compare the current, stock price versus the value that I have. Now, recently, it was up considerably because oil prices had gone up. but it's really given up a lot of those gains and come back down to $142 a share. So it'll be interesting to see where the stock goes. I think there's a higher likelihood that it'll go up because for the fourth quarter of 23, I think it's going to be a really good quarter for them. And once they report the full year, I think it's going to be well received by the market. It was a great buy just a couple of years ago, right after COVID. It was really low priced, and you could have picked up shares at less than $75 a share and really saw your money double in about a year's time. The stock this year, though, is down 18%, and they pay a dividend of 4.24%, and they buy back a lot of shares. So should I put more of my hard-earned money into Chevron? Well, let me answer the 4 key questions and then make that decision. First, I think it's a great company. I like the industry because there's just oil is becoming more scarce, and the best oil companies like Chevron have a lot of knowledge to create a moat around their businesses. They know where to drill, they know how to extract oil, refine it, and get it to market. This company, I believe, is the best run oil company of all the major oil companies. And their debt is way below 3 times EBITDA. So very healthy balance sheet. They offer up a 30% discount. So I'll be buying shares of Chevron and continue to add to my big position in Chevron. Well, thank you for watching the video on Chevron. I appreciate it. I hope you found it interesting. I'd love to hear your comments on Chevron. Let me know what you think of the company and possibly what you're doing with the stock. It'd be interesting to read that. And do me a favor and like my video and subscribe to my channel. I'd appreciate that. Good luck investing for the remainder of 2023.